Hello, you guys. Welcome to Trade Love Academy's weekly ES Futures Breakdown. How's everyone doing this morning? Let's see here. I am going to share my screen. Okay, so hey traders, you guys know me. My name is Fatima, and I'm going to guide you guys through mastering the micro E-mini S&P 500, so MES futures or ES. So if you're transitioning from SPX500 CDFs or just looking to sharpen your futures game, you guys are in the right place. So each week I'll break down market structure, give some trading setups, risk management, and some pro tips to help you guide with confidence and consistency. So whether if you're a beginner or an experienced trader, my goal is to help you navigate the futures market with clarity and precision. All right, you guys. So if y'all are ready, let's go ahead and dive in. Please don't forget to like, subscribe, hit whatever buttons you guys need. It definitely helps the channel so we can unlock some new features and you don't miss any updates or anything that's going on. Hopefully we'll get some additional classes. You guys know how we used to kind of do our evening classes, kind of deep dive into some subjects here. So all right, you guys, grab your charts, grab your notebooks. Let's go ahead and get started. So our weekly sessions, you guys know we kind of break it up into, we kind of mix it up. So we do some learning. I want you guys to be independent. This isn't like a signals kind of group. I want you guys to be able to, the goal is, when you don't need to be on a call, you don't need to look at any chats or anything like that. You're able to analyze the market yourselves without fear, confidently, learning how to get in and out, adding positions, onto your trade positions and things like that. So let's get started. Today, we're going to be learning about Renko charts as well. But I wanted us to, you guys know we used to be really big in our trading psychology. So today we're just going to read an article. We're going to listen to them. I know you guys are probably tired of hearing my voice. We're just going to listen to this really quick 3-minute article about flexibility and what it can mean in your survival in the markets. So, lately I've been really teaching you guys, because the market environment has been so crazy, we've really just kind of been focusing on, okay, if the market does this, then we do that. But if the market does that, then we do this. And it's really been helping people we get all those questions like, okay, but is it buying? Is it selling? On the higher time frames, it's buying, but right now it's just moved 50 points. So whatever your strategy is, you have to know market structure. So I'm big on market structure. We'll definitely be going into that and learning how to, identify those areas. But let's go ahead and listen to this article really quickly.
Flexibility can mean your survival in the markets.
Can you guys hear that? Oh, good morning, Ty. Good morning, Charlotte. Let me know if you guys can hear this guy talking.
Ever watched a rookie trader stubbornly applying the same strategy in every market condition? The most successful traders, like elite military operators, recognize that different terrains require different tactics. Your technical indicators aren't magical oracles. They're tools that work in specific environments and fail in others. Let's explore how to match your trading approach to the market landscape you're actually facing, not the one you wish you had. Know your environment before trading. A fundamental mistake many novice Forex traders make is forgetting to assess what type of market they are working with and adjust their approach accordingly. Navy SEALs and Army Rangers are trained to carry out missions on many different kinds of terrain: deserts, swamps, jungles, tundra, oceans, or Nico's castle. Without this training, their effectiveness would be limited. They'd struggle to survive on unfamiliar terrain because their skills wouldn't work. Imagine a soldier in white winter camouflage trying to hide in a dark green jungle. Tactical assessment, your first trading weapon. The first lesson they learn is how to evaluate their environment and consider what tactics and strategies from their skill set will work for where they are. The same is true for new traders. Instead of geographic environments, you must pay attention to the market environments you are in and use the right approaches for where you are. The ever-changing market landscape. As a Forex trader, you must first identify the current state of the market before deciding which trading strategy to use. Novice traders often make the mistake of applying the same approach regardless of whether the market is trending, ranging, or highly volatile, which can lead to poor results. After all, the markets constantly change, and what drives price action today, this week, or this year will be different next year, next week, and even tomorrow. In the world of Forex trading, you must be just as flexible and adaptive. You must adapt to changing trading environments, either ranging markets or trending markets. If you're new to understanding market environments, read our lesson, Know Your Trading Environment, in our School of Pipsology. Be flexible. You must be able to quickly change your bias on price direction as new information, i.e., economic reports, political events, arises. Short-term memory and not being stubborn lead to flexibility in your trading. Short-term memory means that you start every trade fresh without any preconceived notions of what will lead to success or failure. Starting fresh with each trade. Start from scratch. Not being stubborn means you are open to change and changing your opinions as necessary. Flexibility to adapt not only leads to survival in nature, but in the markets as well. The humble trader wins. A single individual animal is not stronger than the forces of nature. A single trader is not stronger than all the aggregate forces in the market. Don't relive yesterday's trades during today's trading session. The decisions or opinions you had yesterday that led to success yesterday can lead to failure today. Don't ever think you can stick to your outdated opinions and views. When the market tells you that you're wrong, you will lose every time. Successful traders are flexible and adapt their approach to fit the current market conditions rather than sticking rigidly to one strategy. This adaptability is a hallmark of long-term trading success.
Awesome, awesome. So how do you guys feel about that? We definitely have to be flexible in the markets, especially if you're not holding on to trades, for a couple of hours and we're in and out of the markets. Even doing that, we could be buying 1 minute, selling the next. So we definitely want to make sure that we, take these key points and be flexible. We start fresh with every trade. We analyze the market every morning before we hop onto those charts. Long gone are the days where we just hopped into the markets and just placed a trade. So, we have to start fresh, even though we mark up all of our areas and things like that. And again, the humble trader wins. We aren't trying to be right. That's not our job. We're going to be wrong, but we want to be wrong really early and really quickly, and then get on the right side of the market. The good thing, unless if, we're wicked into a trade or wicked out of a trade, and the market continues to go into our direction, being wrong helps us to be right. Because if you're wicked out of a trade and, we practice placing our stop losses in places that will invalidate the trend, that if your trade hits your stop loss, that just means that price is no longer selling or buying, and you need to get on the right side of the market. So being wrong actually helps you to be right. And it's okay. Taking a loss is sometimes taking a good trade. In the words of Coach Paul, sometimes entails taking a loss. Speaking of Coach Paul, I want to say thank you all to everybody that showed up and showed love to me last week when I was on Top Step TV. I really appreciate it. I wasn't watching the chat, so I didn't see everything in real time. But of course, my sister told me that Trade Love Academy, my group, our chat here really showed up and showed out for me. And I appreciate that. And I'm so happy that we are all able to connect and do things together, have a lot more in store for this year. So we're going to be amazing. We're going to be taking payouts. Last year we were really focusing on strategy and you guys getting to know market structure, learning how to get in and out of your trades and things like that. And this year we're going to really, really get into focusing on turning that into payouts. We went over trading strategies and how to make your trading plan and how to, risk management. And this focus this year, 2025, is that we are definitely going to be focusing on taking payouts. We don't care if they're $100, $200, $500, until we get up to our 5K payouts weekly. We're going to be getting, it's coming up to the time, you guys. You guys put in the time and put in the effort into your education. And now we need that to pay off. Alrighty, so FinViz, our financial visualization. We're just looking at the S&P here. These are all the different stocks and companies basically that make up the S&P 500. So we're looking pretty green today. Let's go ahead and take a look at our news, and then we're going to hop into the charts. We'll be learning about Renko charts today and how to incorporate that into our trading to help us stay on the right side of the market and the overall trend. You guys are going to love it. I've been back testing our product ES, our asset here. And we've been doing you guys are going to love it. So we'll get into that. Let's check our news. So you guys are used to using Forex Factory. So today at 9:45, of course, this is Eastern, we have Flash Manufacturing PMI. Governor Bailey speaks. Well, that's for GBP, sorry. Yep, so just news here around our Flash PMI. Those are economic reports that are coming out today. So again, today, Wednesday, April the 23rd, you guys go on econoday.com. Gives a lot of information. Let me paste this into the chat. Oh. So you guys have this link and can pull it up. Alrighty. So PMI sentiment. Okay, so the Flash Composite Purchasing Managers Index, that's the CPI, provides an early estimate of current private sector output by combining information obtained from surveys around 1,000 manufacturing and service sector companies. All right. So, this is released around 10 days ahead of the final report. So I want you guys to start getting used to and getting familiar with what days and around what times these reports are scheduled. Same reports, they already have the dates out for the entire year. If we are making our trading plan, we want to make sure that we're not trading around these times, or if we have a day that we have a lot of reports coming out, maybe that's a day that we stay out of the markets. So remember, just being very organized in your trading. All right. Let's just read some news really quickly. Alrighty, Bloomberg. Remember, we are learning how to incorporate our fundamental analysis, market sentiment, and incorporating those things into our trading so that we have an idea of what the investors, I know we are just day trading, we're not holding on to these trades, but what are the investors? Because those are the people, those are the market makers, those are the people that are really, holding on to these trades for long term, with a lot of different shares. So we want to make sure that we are in tune to what's going on. Alrighty, so Wall Street is heading for another big day of gains after President Donald Trump said he doesn't plan to fire Federal Reserve Chair Jerome Powell and floated the possibility of cutting tariffs on China. So S&P 500 futures were up 2%, adding to yesterday's 2% rally. So you guys know that this kind of political and economic narrative, it does trigger risk on buying across all the equities. So that definitely lifted the ES futures strongly. So we had a nice push yesterday. And again, remember, whenever we're trading, we want to make sure we have some type of news channel, MSN, Bloomberg, Yahoo Finance, whatever it is, so that whenever anyone tweets something, we have any headliners coming out, we are right there in the markets. We're able to see it and, secure our trades. Sorry, brain freeze. Alrighty, so Tesla jumps 10% in early trading. Chief Executive Officer Elon Musk vowed to pull back significantly from his work with the US government and finally focus on the car maker. Thank you. And let's see, assuaging concerns about the company's worst quarter in years. So you know that Tesla is a high-weighted tech stock in the S&P 500. So its strength really contributes to broad market upside, especially in the tech sectors. So, as ES traders, we can use this as a signal that, tech sentiment is recovering. So we're getting back, we're buying up. Alrighty, Intel is poised to announce plans this week to cut more than 20% of its staff. Whoa. A move aimed at eliminating bureaucracy, according to a person with knowledge of the matter, and shares rose 3%. Alrighty, pretty straightforward there. It's like semiconductor kind of energy, if I recall. Alrighty, investors keen for early insight into whether China and other foreign governments remain eager to keep buying treasuries will be turning to this week's slew of bond auctions. So we have a lot of bond auctions this week. Scrutiny will be strong on the results of the $70 billion 5-year auction today. $70 billion. Whew. Can you imagine? Alrighty, so we really want to keep an eye out on the results. It's a really rate sensitive sectors. They could definitely react and it can, ripple through the indices this afternoon. So even if you don't understand what's going on, you know what to look out for, you know what times to look out for it. Remember the tip last week on your charts, put that vertical line. Remember, it's 8:20. We went through psychology. We went through looking at our news. We checked a couple different news outlets. We're just 20 minutes in. If it was you by yourself without me doing all this extra talking, remember we were talking about having our trading checklist, remembering that we're doing A, B, C, and D before we hop into the markets. So we're only 20 minutes in and we're about to hop on the charts now. So that's just to show you it doesn't take long, but it is very important into, getting you on the right path of getting organized and intentional in trading. Alrighty. Sorry. What was the last thing? Amundi says that it's seeing a major reallocation as clients pull away from the US and pile into European funds in response to the market upheaval triggered by tariff wars. So, while it's not like immediately bearish, it does hint at like underlying caution towards US equities in the midterm. And Amundi, I think that's a French company. Let's see. Yep. It's a French asset management company. So major company there. Alrighty. Hey guys. All right, you guys, we are all done. We have all the knowledge that we need into market sentiment. We know what data, economic reports are coming out today. We went over our psychology. We're in the moods. Let's head on over to the charts. If you are ready, if you have your charts up, remember, you guys are not just looking at my charts. You're also marking up your individual charts and everything that we do, even though we're just paying attention to ES. I kind of did go over YM, which is US 30 for my girl Kelly, and gold as well towards the end. And then, later in the year, it's just April. So probably, June, July, we'll start to incorporate, those other pairs. It's just that with futures trading, that we just wanted to focus. When you trade YM, when you trade gold, you have to have, it's a different price fluctuation. So you have to have that. So I just wanted us to just stay focused, just learning one thing. But, we're not going to deep dive into technical analysis with gold and US 30, the Dow, but we will do the same thing that we did last week. I'll kind of just give some areas there, and the same way that we analyze SPX, S&P 500, same way how you guys would analyze any other, no different. Alrighty, so you guys, we have it. All right. So the overall tone in the markets today, bullish. We have a powerful rally. We see that the Fed is easing tariff fears. We're having a tech rebound, So we might have a strong open. Fingers crossed. We just want to be mindful of overextended moves. So we're definitely going to be taking a look and, keeping a strong eye into our pivotal zones, especially on the lower time frames. So you guys keep an eye out. Definitely have Tesla. If you're looking out for Tesla, it is crucial. If, Tesla, Intel, any of those things, if they have strong gains, then the momentum is going to most likely continue. We also want to monitor, what else were we talking about? The Treasury auction. So, bond demands and yields can definitely quickly shift market sentiment. So we want to definitely make sure that we are aware of when that information comes out. Okay. Hey, guys. Hey. Okay. If you have out your charts, throw some threes in the chat. If you have your charts up, you're ready to learn about what a Renko chart is, throw some threes in the chat. If you already know what a Renko chart is, if you use it in your trading, throw some nines in the chart. I want to see how many people actually have used this chart type in the past. So Renko charts, they're like a type of technical analysis charts. It uses like these little brick things or boxes, however you want to call it, to display price movement rather than like time-based candlesticks or bars. And each brick, it represents a fixed amount of price movement. So that helps traders identify the trends and filter out all that noise. And in this market, like I said, I've been back testing this. It has been a lifesaver just to stay on the right side of the market, not get confused by those pullbacks and anything like that. So, all righty. Okay, y'all don't know Renko? Don't worry. You're going to know it today. Okay, so get it back over here to my other charts. Let's see if you guys can see all these, my monitors over here. So that's what I'm looking at. So I got to make sure to check the chat. It's because, I don't know, scream at me. Somebody do something if y'all need me and I need to slow down. Okay, so if you want to know more about Renko charts, this really cool article by TrendSpider, we get a lot of our information from them. And of course, you guys, they have an entire library here of a bunch of different subjects, macroeconomics, all that good stuff. Okay, but really cool article, tells us the origin of the charts, some ways to read it, pros and cons, and how it differs from our regular Japanese candlestick charts. So let me drop that in the chat. Bam. All righty. So Renko charts are a useful tool for technical analysts and traders who are looking for a simpler way to interpret price movement. Right? Okay, so they do have their limitations. We definitely still have to keep our regular charts here, our candlesticks. Definitely have to still keep that on our charts. Okay, I know we have some new people here. We're going to have our price, our chart keys. So remember, we're using our, let me clear up this chart here. And then we'll go over our indicators again, just really quickly, and basically like what we're using them for. All right, how's this look? Better, right? Way better. Okay, so we're using our pivotal zones here to help us identify support and resistance levels. Basically, once price gets up here to the 7-8, well, really for SPX, ES, let me start saying ES. So especially for ES, it likes to come up here, doesn't, to this R7 level. This is just our resistance levels. And typically we would like to take a sell once price comes up to these levels. And then we're looking to take buys when price comes to these S1 and S0, kind of these levels down here. Really simply going over that. RSI just helps us with price momentum when we are overbought, such as what we're seeing here. We're expecting price to cross down and start to sell. Of course, we know that being overbought, that does not mean that price is going to sell. Remember, these are just indicators. They're just kind of like alarms. They help us to, hey, look at the market now. Look at what's going on. We're reaching kind of a resistance level. So if we're buying up, we're seeing the market kind of come into these levels. We're expecting it. We've been waiting for it. We've had this support. It's been coming up here to these. Okay, we'll go into that. So our intraday TP that we marked up, but we have to be very cautious because even though we have these beautiful green candles, we are in our overbought range. Alrighty, our moving averages. I do keep our moving averages here. We have our 800 purple, 200 red, green is our 50, and then our short term. And we use these to help us, again, spot support and resistance, also to identify the trend. Typically, I just like to have you guys know I like you guys to use these EMA cross, short-term EMA cross, this 10 and this 20 EMA. So we just keep these on our chart. We know that the market reacts to touching or bouncing off of these EMAs, especially on the higher time frames. So whatever you're using, if you're using the short-term trend or if you're using the 20, 200, and 50 EMA cross to help you, you have that as well. We also use our fibs if we're in a buy, meaning we're making higher highs and higher lows. We're going to use our low to our high for our fib direction. And if we're in sells, we're going to be using the highs to the lows to determine our direction. Alrighty, so we have our keys here, our strategy. Basically on the 4-hour time frame, we're going to use the 4-hour time frame. Let's do it all together, guys. We're going to practice this. 4-hour time frame, we're going to identify the higher time frame trend. So you guys tell me, we're on the 4-hour time frame. What is the trend on the 4-hour? Are we buying or selling? Let's come in here a little bit more. Buying or selling? You guys drop it in the chat. I want us to be doing this together. I'm going to be traveling in the next couple of weeks, so we're not going to have class coming up. So I want you guys, I might have Ty come up here and teach the class. So Ty, are you taking your notes? Because Ty's about to teach the class next week when I'm not next week, but sometime soon. All right. Yep. We are. Girl, I'm not playing. You talking about your no LMAO. Yep. Clear your charts. She said, absolutely. She's such a team player. Alrighty, yep, we are buying. We know that we are buying because we can take a look at our path tools. Even though we're kind of ranging here, not really making significant higher highs or lower lows. However, within this range, we can see, especially, let's just look at from Monday here. Monday, it hit our area of support, and price from here has just been making higher highs. You guys we're speaking about charts, switch over to your line charts if you have trouble identifying where the market is going. So we see these peaks and valleys are making higher highs and higher lows. What's another tip? We have another indicator, which is what our higher highs and higher high, higher low strategy from Lonesome the Blue. Ooh, want to meet that guy. He seems fun. Alrighty. And so if you're having trouble identifying, your higher highs and, lower highs and all that, this definitely sometimes when it's ranging, I would take it with a grain of salt, but we have our indicators. We like our tools here. Okay, so we have our higher highs. We're making higher highs and higher lows. We also had this short-term EMA cross here for our 10-20 cross. But we see the market just making higher highs, higher lows. We also have a gap here. That's something that we definitely want to mark off on our charts, our gap. Where do we see the market heading? So we had this intraday TP marked up since last week. We see that the market came back to this support area. We had this engulfing candle. Price shot down right here. Sellers were unable to take the market lower. Buyers were unable to take the market higher, here. But we've just been bouncing around. Looks like we are heading up. We're buying. We're heading up to maybe this 200 EMA. AKA, look, the 200 EMA is at 55.14. The R7 is at 55.50. So, once we come over to this area, you mark it off. Of course, our moving averages change, but it doesn't matter. Whatever you're using, if you're using your pivotal levels to determine your take profit, or if you're using your EMAs, if you know that, it's strong there, we definitely want to mark off these areas, because when we're trading on the lower time frame, and we see like a big flush to the downside after we've been buying, we don't want to be like, oh my gosh, what was that? I can't believe it. No, you already know. Okay. Higher time frame, it's reaching a critical area. Alrighty, so we're buying on the higher time frames on the 4-hour. I do want to notate this gap. So remember, we are labeling our charts. We're going to have our charts nice and labeled so that when we are trading in real time, we don't have to think. Where's this line? Why is this box here? What's that? We've already done the thinking, and we can just get in our flow state and keep moving. Hey, Miss Kelly, my fave. I was talking about you earlier today. You have to go play the replay and see what I was saying. I was talking about you like a dog. It's fine. Alrighty, so first step, we've already identified. We definitely we've identified our 4-hour, what was going on our 4-hour time frame. We marked up our gap. We see that price is still holding in the support area. So let's go down to the 1-hour. So this is what's called a multiple time frame analysis. Okay, now on the 1-hour, we're going to see what the current state of the market is in. Is the market still buying? Are we in a pullback? What's going on? So let's look at the 1-hour time frame from Monday. What has the 1-hour been doing? Tell me in the chat. Have we been buying, selling? Are we in a pullback? What's going on the 1-hour? Anchor. Okay. What is going on the 1 hour? Yep. Hey, Ashley. Yes, we are buying. We know that we are buying because what is the market doing? This was our low. We're making higher highs, higher lows, higher highs, higher lows, and so on and so forth. We had this huge gap right here that happened. Can you guys guess? This gap happened. This was 4 p.m. on Tuesday yesterday. Yep, looks. But can you guys guess why we had this gap up yesterday at 4 p.m.? Remember that the futures market, I know that we're able to trade like when we were coming from Forex until about like 5 p.m. Eastern. But we know that the futures market closes at 4 p.m. Eastern. Remember we were talking about earnings and we have different things. Yep, the market, it did close, but this huge gap here, I believe we had some earnings that came out yesterday. Earnings report. Good guesses, though. Good guess. Those can be, though. There could have been some news. Earning report is kind of like some news. There was also, I think Trump did speak. You are right, too, Ty. He spoke. That could have contributed to that as well. But all right, yes, we are making higher highs and higher lows. What's another confirmation of this trend? Do you guys see if your strategy is simply just this EMA cross? We had this EMA cross that would have been your signal to get in. Oh, Charlotte. Okay, you guys are making me so excited. Y'all know I'm used to everyone getting on Zoom and we're able to talk and unmute. So I appreciate everyone. I know typing is kind of annoying, but it helps me to see where everyone is and what I need to go over. Oh, dang, I had our charting steps here too. Okay. Alrighty, so yes, we have, okay, so if you were using your pivot levels and you were using the 1 hour time frame, you would have had your alert set at the S0, you would have had your alert set at the R8, so you would have known, okay, when price was crossing down into this level, you would have gotten an alert. Of course, that's not your immediate buy signal. You just don't hop into a buy. You would then wait, get your confirmation here. Price is still selling. Just because it comes to the S0 does not mean that price cannot continue to make lower lows. But let's look at some signals here. How do we know that price is going to continue to buy? It's going to use this area as support, this S0, and not continue to sell and instead go into a buy here. Well, one, we can see that, it's near this support level. That's our first clue, this S0. That's also support from the 4 hour. Second clue, also our RSI here is oversold. If this could get out of our way, is oversold. I'm trying to, okay. Oversold, and it looks like it's buying up. Once we have this kind of cross here, I know a lot of you guys are probably used to seeing this RSI, the stochastic here as lines. I like to have the area filled so that I don't see all this little movement here, but it's still just your stochastic, just changed. The style changed there so that we can see those crosses very clearly. Finally, we had the price crossing up. Then what do we see? These are hourly candles. So let me zoom in here. So now that we have our RSI cross, we had this really indecision candle here, this red candle. Does anyone remember last year we did our candlesticks course? Can anyone tap back into their memory banks and see and tell me what type of candle this is called? Is it a doji? Is it a dragonfly? Is it a hammer? Or whatever it's called. Who can identify? Ooh, Miss Charlotte. Yes, ma'am. All righty, so red doji, that's an indecision candle. That was our second clue. So you guys can see that whatever path you take on that yellow brick road, we're all going to make it to the same place. So that doji would have been another indication that, hey, this is an indecision area. It was red as well. Next, we have our huge, the next hour comes in. So this was at 2 p.m. on Monday. 3 p.m., that candle comes in. We barely had a wick there. Let's see if you guys can see that. Let's cut off all this kind of noise. Barely had a wick here. I know I have my crosshair. At this level, that little wick there. And what did it do? It just opened, it shot straight up. It took out this 1 hour candle. This one candle here took out the price of this 2 p.m. candle, 1 p.m. candle, and also shot above this 12 p.m. candle. So when you see this one candle being able to engulf the price action of the candle before it and the candle before that one, that's what is called, so we have a 3-bar reversal. Even more, take it 4-bar reversal at this point, and then we can just start to see price making higher highs and higher lows. But that's how we would have gotten into this trade. We still would have been in this trade. Of course, if you're not in your live, if you're in a simulated account or if you're in a trading combine, if you have enough margin, if you're a ninja trader like me, you can hold on to those trades depending on a couple of different factors. But if you had to get in and out of your trades, no problem. Now you know the entry point. Now you know the destination. Seems like we're going, where are we going up here, guys? We're oversold, but as you can see, we've been oversold for a while. And the market has just still been making higher highs. So that's another thing. Do not take your RSI as buy or sell signals. It can help, for instance, like, in this situation, but looking at your market structure, if price is still making higher highs and higher lows and we're oversold, you got to keep with the trend. And so how do we do that? Now we know the area here. So we have our overall take profit area. We see that the market, we haven't really, I know I'm talking, but look at these hourly candles. We haven't really made significant higher highs or higher lows. So we have time to analyze the market. We have that news coming out at 9:45. So whenever news is kind of on the verge, towards the New York Open, sometimes we don't see those big moves until after that news. So, alrighty. So we had this high here. Price broke. Price made a higher low, higher high, and then it broke this level. Let's make a trend line. So this was the high here. We'll make it red because usually we like to see, price when it comes to this. We made a new high. It came down here, broke above that high. We want to, bring that across because we had a break of structure. And we want to have our highs and our lows mapped out so that if we know that, okay, we're still buying until price does what? If you're in a buy trend and price is making higher highs and higher lows, we're still going to be on a buy trend until price does what? Who can tell me? Yep, MJ, we were overbought. We're heading near our R8, our plus sign here, our 800 EMA. Yes, Miss Charlotte, until we reverse, or the pivot level shift. Exactly. The pivot levels are going to shift after price makes a lower low. Exactly, MJ. And exactly, Charlotte, we're going to reverse. We'll see that reverse when the pivot levels shift, but we have to make a lower low first. So that's why I say always mark out your highs and lows, especially on the higher time frame, so that when you are zoomed in, you know that, okay, hold on, price just broke below. This isn't just, any kind of level. This was previously a high on the 1 hour, and now price is broken below that. Okay, that's my second confirmation. We're probably going to see a pivot level shift because we're about to reverse, right? Okay, so 1 hour time frames. We don't have any fibs that need to be added right now. Remember, we add our fibs when we start to see price making kind of a lower low, or and breaking, and to see, we're anticipating that reversal. And so that's when we will put our pivot levels to see where price has the potential to pull back to before we get back into that continuation of the overall trend. Oh, hey, Maureen, I should have known it was you. I should have known it was you. You love to engage. Alrighty, so we have all this information. We've done all the steps so far. We're on step number 3 now. So we're going to zoom into the 15-minute time frame. And like I said, we're talking it out, but as you can see, these steps are really, there's just a couple different steps to chart, 5 steps to chart. And again, once you do your charting, kind of, if you do it on a Sunday, as you can see, there shouldn't be too many changes in the market, especially on the higher time frames. So it shouldn't take us that long. Alrighty, so we are on the 15-minute time frame. This is where we get our intraday moves. This is where we like to enter and exit the market. So first thing, we're going to go ahead and add our alerts onto our R8 and our 15 in our S0 and our R8. After you've added your alerts, throw some ones in the chat so I know everyone is with me. This is how we're setting up our move for the day. This is important. So we went over what happened in the past. We kind of went over marking up those levels. Okay. Kelly, you multitasking. Moving fast. Alrighty, so we have our alerts. When price would have alerted us here at the S0, that would have given us an indication even on the higher time frames. Since you love these pivots, on the higher time frames, that told us, hey, this is a buy area. It's shifted. It's the S0. So even though the markets would have closed, that was an awesome indication that we should have been in this trade here from the S0. Already, we didn't catch that. So we would catch now when the market is pulling back to make a higher low. And ideally, we want to get back into the market on that pullback for that higher low for the continuation up to this R8. So this would have, if we were unable to get into the market here, which was, kind of 4:30, highly unlikely around this time, and hold that. This was also near our 800 EMA. So it crossed above that. That's a strong EMA here, exponential moving average. We usually see that our 800 EMA is used as like resistance. And it was. Let me see if I can. What do I want to do with this? I don't know how to. Okay, let's just delete it. No, I'll add it back. Alrighty, so as you guys can see here, price did really react to this EMA. It tried to break above it in the past. Price shot back down. However, this 200, we have this 50 and 200 EMA cross there on the 15-minute. Strong. That's a buy trend signal there. So after we saw that, we saw this bounce. We can see that price is trying to make higher highs and bounce above that. It had some trouble here. Buyers were unable to break above this high, but then it eventually did gap up after that news. report came out after hours. But this would have you guys, are you guys understanding what's going on in the market here and why this happened and how we got this nice break above this area? Everyone with me? Oh yeah, we got the trend going on. Okay, so we're at the 15-minute time frame. We can clearly see what's our next level. Our next price level is going to be 54.68. We know that the R7 is usually a level here that price tends to reverse and we get a little pullback. However, look at our EMA, look at our RSI. It's still giving us buying momentum. We still have our cross here. Also, too, with that trend, when we see our EMAs nice and spread out here, that gives us a good indication that price is still with the trend. So now what do we do here? Alrighty, so our charting steps tell us to zoom into the 15-minute time frame. We find minor market structure or major, we find our minor market structure, which is on the 15-minute time frame, meaning our support and resistance levels, which we are using as our R8 and our S0. We've placed our alerts there. We've already went back and saw why, we are using these levels here. Just because it is the S0, we want to see how that indicator got that information. And as we can see, we're just taking from, the previous highs and these previous lows and breaking structures in this instance. So, even if you're not using your pivotal zones and you're just using naked charts and you're just using pure market structure, and if you were just looking at the charts without all of that there, you would just be able to, sometimes it's not as clear. We can clearly see that this in the past here back in April the 14th, this was a major resistance area, this entire area here. So coming back up, that price point, this 54.60, 54.80, between the 50s and the 80s. So it's coming back up over here. So we want to know why we use our indicators, what they are showing us, and how we could use them, or how, if we didn't have these indicators, how we could find this information without it. You don't want to be blindly using something. You don't know why you're using it, what it entails, or any of that. Alrighty, so next price point here, we already see our next TP. Now we're going to get this entry. Of course, if we see price break above, remember, this is a decision zone. So we can see price come up here because it's been resistance in the past and now pull back. That's when we would then do what? Take our lowest low and our highest high and potentially see, okay, where's the market going to pull back to? Even without our fibs, we have this huge gap here. And our gap is near our S1 and S0 level. So we already know that if we're looking for a pullback and the market's going to sell, we're looking for, once the market gives us a break of that lower, you guys know what you were talking about. Remember, making a lower low and breaking structure, that we have our sell take profit area. If you want me to repeat that again, let me know in the chat. Why is this our sell take profit area if we break structure and start to make lower lows? We want to fill this gap. Price wants to come back down here to this S0. This is also, where we kind of had this break and making higher highs. Okay, perfect. Yes, I can. So right now we are in a buy. We're making higher highs and we're making higher lows. This was our previous high here. Let me zoom in. We're on the 15-minute. Okay. So price made a high here, higher low, and it finally broke up above this high, made a higher high. We formed a gap here, and now price has made a lower high because this was the last kind of low, even if you take this area here. And it's just been making higher highs and higher lows. We are reaching an area of potential resistance in the market. So this R8 level where we placed our alerts. So 54.70, we're expecting price is breaking up. If you're in that buy, hint, hint, hint. Price is making higher highs. This was a high now. We're seeing that price is breaking above here. Of course, go to the lower time frames for your entry. We're getting there. But so Ty, I'm saying that if price gets up here to this R8 level and it doesn't continue to make higher highs, because this is a resistance level we saw in the past, major resistance at this level, demand zone. And we're going to mark off our areas. So this was our high. This was our low. This was our new high. This is our new lower low here. So we want to mark this off because what we want to see, where is the area that price, if it comes to that area, breaks that area, that we now are going into sells. That's broken. It's making, the market is now making lower lows. So we want to mark this off, and we want to keep, once the market keeps making lower lows, you guys need to mark those off, because once we break those levels, that's an indication of a reversal or that the market is going to sell. And if it does sell, Ty, we were saying that now we were going to be taking, where would we be taking price? If it reaches this R8 level, any of these levels, sometimes we might see it wick up to 54.80. It did in the past, but we're going to be looking to see if price does not continue to buy, and meaning making higher highs and higher lows, and it uses this level as a selling level, which it typically does on the 15-minute time frame. This is our sell area. We're going to take price back down here to this 53.33 area, between 53.33 and 53.12, because that's our S1 and our S0 levels, our support levels. It would also fill this gap that we had here that the market just gapped up as well. You got it? I know you would. Awesome. All right. So what did price just do? I want to make another, whether if you're using your wicks or if you're using your candlesticks, it's not going to make a difference. So much so it's like price. Whatever you use, just constantly use it. If you use your wicks for your highs and lows, if you use your candlesticks, wicks do matter. Wicks matter too. So I definitely have to get the information, because that is a high point. That wick shows you where the market was able to take it up to in that whatever time frame, like 15-minute time frame. So candlestick anatomy, we know that the market opened up, for instance, on this candlestick at 54.59. The market was able to take it down to its lowest point, which was 54.48. The buyers were able to push it up to 54.56, but it closed at 54.55. So, those wicks help us to identify highs and lows. So they matter, but you have to see where you're going to. I like those candlesticks open and closing because everyone uses that. So, all righty, what was I notating? Remind me. This is our 15-minute high point. And this is our 15-minute low. Okay. So if price comes, we have our areas here marked off. We're making a new high, but this is our most recent low. If price breaks below this low, that's when that would invalidate our buying trend here. We're no longer making higher highs. We're making lower lows. We might see a pivotal shift, We're going to be anticipating a reversal. We know where we will be taking it to. But right now, that's just, remember, we're saying if the market does that, we're going to do this. If the market does this, we're going to do that. So that's if we have that market really big flush down. But right now, let's focus on what's going on in present time. Right now, we're still buying. So we're still taking our trade up to this 54.68 area here. So we can put our long position tool on. And now let's go ahead and go to our lower time frames to perfect our entry. Of course, this isn't good risk to reward management. I'm just putting a position tool just because this is how, remember, I teach people who don't know a lick about trading at all. So if it seems really remedial how I'm explaining these things, this is just so that everyone can get it. So you put your position tool on, you definitely, and then we're going to go to the lower time frames to get our entry. Ty says, so if the next set of candles continue up, then you move up your 15-minute high. Yep, you would have now your 15-minute high would you would do that. You would now have a new high and a new low. Once this market comes back down here, so let's just say price comes up here, touches this 10 EMA, and now when it makes this new higher high, that's when then we can move our highs and our lows. We have to confirm it. It has to have a new lower low and a lower high there. So that's why we use our previous levels until the market makes new levels. All right, what was I doing? All righty. So now that we have the area, and of course, you guys, you always have a take profit in place. You always have a stop loss in place. When you go to the lower time frame, if price continues to make a higher high and it shoots through these levels, we'll see that on the 1 minute, we'll see that on the 5 minute, maybe on the 3 minute as well. You can adjust your take profit. So I had a student, she's like, I don't want to put in a take profit. It's going to keep on going. You guys, the market moves in waves. Imagine if, you were all the way having your entry here and you didn't have your take profit at this point, and you couldn't, why would you wait? Have your take profit, get back into the market. The market's going to pull back, even though, it continues to shoot up. Take your monies. Do not leave any money in this market. We're not how the market was last year and how we were able to hold on those trades and it was just trending. And we didn't have, huge wicks if there wasn't major economic reports coming out that day. This is not the same type of time at all. So take your money, know your pair, know how much it typically moves. We're not trying to get like 1,000 points out of something that only moves 50 points for the day or anything like that. So know your pair, know your target points, know your entries and exits. Those all need to be mapped out before you get into the market. All right, now I remember what I was going to do. I was going to make this gap thing. All righty. All right, I'm just marking off this gap because when I am in my flow state, just want to make sure that I have that marked off. I erased it, so let me just add it again. Okay, so now we have our high points, we have our low points. We know that, when price reaches this R7, that's a major area of resistance. Sometimes price doesn't even get up to this R8. So, but we have an idea of where we're going to take the market. So now we zoom in We also need to notate if we have any major psychological price levels. So in ES, that would be kind of round numbers. So 5,000, 5,100, 5,400, 5,300, those type of things. You definitely want to, how the market kind of use those as magnets. So like for instance, right here, you can lock it in, 5,500. Major psychological price level here. You can just always, that's just something that you can always just lock into your charts there. And then again, you have that here so you just want to have just information. Just make sure, sometimes you might have something where, let's see, you might have, for instance, you don't want all of this on your charts. You can have it where you just have this visible on the 4-hour time frame, but you want to be able to know what's going on at these levels. So, sometimes you hear people say, oh, I'm going to take a buy at 5,400. And you're like, kind of have that already marked up as, a major level on on another time frame. I'm going to hold out. Let me wait to see how it reacts. So you can definitely do that when you have these levels already marked up. You can remove this high. Now we kind of have this range here. We have price making a low, making a high. We already know that, this was a selling area. We were already overbought. If you were able to take your buy here while we were talking about it, and, it made that higher high, that was 18 points. Even if you just caught it here at the breakout, that was still 6 points. Of course, when this next 15-minute 15-minute candle came in here as this huge selling candle, as a red candle, had that gap there. That was your clue to get out of the market. All righty, so let's see. Let's mark our entries. We see that this was our low point. We have this huge candle coming down here. Has price made a lower low yet? On the 15-minute time frame, has price made a lower low? Yes, Charlotte. When marking your highs and low, use the most recent high and low. So if you're not sure of that, switch on over to your line charts and you look at where the market currently is, that price, and just trace it back up to the in this situation. Now you have your most recent high. Just trace it. Now this is your most recent low, high, low. And then of course you have these like little kinks. Once you would do something like this, like just, okay, I have a high right here. Okay, I have a low right here. You can then, once you go into your candlesticks, you can adjust and just make sure that those areas were accurate. But yes, your most recent high and your most recent low. Okay, perfect. So now we are on the 5-minute time frame. We see that the 5-minute time frame, we still have not made a lower low. Price has not, moved below this point. However, what have we done? We've made a higher high. We have that information. We can just move our, lines on over. Remove that. We don't want to have anything on a chart that we don't need. So we have our low. We have our new high here. And now we are waiting for our 5-minute to give us this buying momentum. You can go down. Now you can go down to like the lower time frames for your entry. Okay, so now we can see if we wanted to re-enter this trade to this R8, R7 level, we look at our 1-minute time frame. As we can see, price has, came down here to this 200 EMA. It used it as support here. We had our EMA buying up. We got this nice engulfing, we got this nice green candle here. Sellers tried to pull, price down. It was unable to. We're making higher highs. We want to get back into this trade once we kind of see price break above this level here. Some people might, you know, take this entry and wait till it breaks above, you know, this candlestick. I kind of want to wait till it breaks above kind of this wick here. Wait till price has kind of moved out of this little sideways movement. Let's see here. If we take this low to this high, we see that if you use your fibs, let me move this out of the way so we can see clearly. That price from this low here, this wick here, I use this wick up here, price pulled back, it retraced all the way back. It touched this 786 area. We know that the 786 area, and particularly ideally this 50-61-8 level, is a buying area for, you know, if you were taking that counter trend trade, once you saw this break here, you would have taken it down to either your 50-61-8. If you saw that there was still selling momentum, then you adjust accordingly. But basically, you're waiting for price to retrace back to these areas to get back into that buy. Of course, if price does what? If it breaks below this low here point, our fib is invalidated. We're no longer looking for buys. We would be now prices making lower lows on higher time frames. So we would be looking for sells. Okay, so we're waiting for a break for price to come back here to this fib level. Let me see here. We'll put on a paper trade with our parameters, do our TP right here at our P set. Oh, we just got a pivotal shift. What time is it? Up, it's 9:15. Okay, so let's go back. I'm putting in a pending order. If price breaks above this level here, I want to be in this trade. I'll be taking it. Our P7 was up here. I do just want to notate that because you will see like the market pivot levels kind of shift more towards this time. Remember, I do not encourage taking trades during the New York Open, especially when we have this news coming out. Remember, we are practicing entries, exits. We're taking this analysis, and you can use this throughout the week and throughout the rest of the day after we see how that news plays out. Okay, so now we need to adjust our take profit because we got a pivot level shift. Remember, we're being flexible. We don't want to say that we're until, you know, so we're going to move our take profit down to this P7 level. So 54.57. And if we see a shift, then we can, you know, just adjust and take it up to our new take profit level. I mean, our second take profit level. So that's how you use those TP1, TP2 areas. If you see there's still momentum, and we're going to watch it in live time here. All right, we are activated. We are in this trade here in our paper account. Why can't I move this? Okay. We don't have too much information now. It's our pivot levels. It's done with exactly what it was supposed to do. It gave us our pullback area. We were able to get back in the trade at the 50% level. Price is making higher highs from here. It broke above this level. We are in profit. I think. Or maybe not. Let's see. No, we aren't in the trade. That sucks. Oh, I put in the wrong order type. Well, paper trade anyways. You guys get the point. Why didn't that happen? That sucks. See if it'll activate now. Okay. Who is in a similar trade? Remember, I don't have my disclaimer up. This is not buy or sell ideas. I'm teaching you just how I trade, how I would get back, how I would get in the market, where I would get out, how I would adjust my profit levels. When I'm telling you these things, they're just ideas for you then to kind of look at the market, see how you trade, your strategy, wait for your confirmations. And if that is a trade that you would have also taken, then of course, you do what you got to do. But definitely not financial advice. We're just going to watch this. Now it's boring. Now we're just watching and waiting, and we're going to wait to see how price reacts up here at this P7 level. Let's see if our trade, if we can adjust, if we get out and, potentially get into a sell, what's going on at those time frames. Okay, Kelly is in. Now, Kelly, you're a US 30 girl. Have you been practicing trading ES? Let's look at our other pairs here. Okay, so we have our ES trade set up here according to, we did a top-down analysis. We looked at what happened yesterday. We're looking at our entries and potential price points for a buy. However, we still have our, if price makes a lower low on our 15-minute time frame, and we're looking for sells, and we definitely know, the price levels and the areas for that as well. And you can hold those. Well, let me stop saying you. And I'm just going to say me. Okay. So I typically don't hold those levels. I kind of scout my way down. As soon as I see some resistance on, a 5-minute or a 3-minute time frame, I typically like to just get out of that trade and look for a re-entry. But everyone has a different trading style. And so you definitely have to trade according to your trading style. Okay. What is it? It is 9:20. We have 10 minutes. I wish I could play some music here while I just kind of go over, while we're watching this play out here. Kind of just want to go over these other markets just really quickly. I'm not going to, teach it or anything, but kind of just the same thing. We're seeing the same thing with the Dow. We have a gap right here. So if price sells, this is going to be my take profit area. Where would I be looking for that invalidation? This is our high. This is our latest low. So if price breaks this low, I'll be looking for a sell down to my S0 level. I'll just keep them gray. Okay. Now if price continues to buy, I'm looking for this 40 to 34 level as my next take profit zone. Alrighty, let's practice what we were talking about and setting up our trade for something like this here. Right now, we're on the 5-minute time frame. We're looking for price to continue to buy up to this level. However, we're seeing a little bit of divergence here. And what does divergence mean? It means when we're seeing our RSI giving us, for instance, selling momentum, but we're seeing our candles buying here. That's an indication that a big move is going to happen. So I would be looking for this long once I get this buying momentum. You know, I want to see a break. Once we get a break above. Now, this is when I would, you know, we don't do any decision making on the 1 minute. We just take a look here to see what's going on. Right now, the 1 minute looks overbought. So this is when I would put on a fib again on the 1 minute. Of course, if it breaks above, then I'm just in. 5 minutes kind of, let's see what the 15 minute. 15 minutes still has buying momentum. So we'll see if it breaks. If it breaks above and it you know, it hits this level and I'm activated, then that means that, okay, let's see if I can do it now. That means that, you know, these 15-minute prices made it higher high above these 15-minute candles. However, this 1 minute time frame looks like, you know, price might pull back. We might be able to get a better entry. So we're in a buy. So remember, we're going to take, if we want to do our fibs, a low to a high. This is just a preemptive fib level because price hasn't made a lower low yet. Just telling me that price is, you know, pulling back. It hasn't done that yet. It's continuously making higher highs. So doubt, even though we're near this level, we don't want to get wicked in. We see that this was, you know, our previous high area. Ooh, it's getting close. If we get wicked into that trade, we're going to have our stop loss. Oh, now look, let's see if if price comes down here to this 50-61.8 level, like it did in ES, or even this 786 level, because we see that, you know, once price makes a lower low here, just, you know, remember we're saying we're just practicing how to get in and out of the market. We're looking here. It looks like there's some resistance here. It looks like price is not ready to continue to buy for this pair. It looks like it might pull back. Of course, if it makes a higher high, fib is invalid. However, if it pulls back, we could grab a couple points, you know, down to this 50, that's 20, 30 points here, or down to the 61.8 level. If we still get selling momentum, it may even come down to the 786 like ES did. We do see that this 1 minute is overbought. Looks like it's going to be coming down for this sell. But we have trades in either position. If we have a break, we have a buy. If we don't, and we go into the sell, then perfect. Oh, just one order, sorry. I don't know how to. Okay, here we go. Here we go. All right. I think it's going to let me. So if it breaks above, we have this kind of tentative order here. Let me take it off because it doesn't look like that's happening right now. But if it happens, we know what to do. Right now, it looks like, you know, of course, if we had our stop loss, is going to be above this area. If price breaks above these two higher levels, then definitely we don't want to be in a buy because price is making higher highs. So tight stop loss. Take profit, we'll have it down at our first take profit level. We'll be watching it to see if it goes down any lower. We're going to see, we're making sure it doesn't break our lowest low here. And just continues, you know, if price comes down here to 786 or 61.8, that's still higher. Price is making higher lows. So once price comes down to that level, looks like it's still dropping. You see how is what I mean by let's see if price is going to continue to sell. We see that we're down here, still bouncing around. We see that we're down here, but price is still, our RSI is still giving selling momentum. So that's our indication that, okay, well, it's still selling. Now, if we were coming down here to our 50, 61.8 level and we were oversold and kind of looked like price wanted to cross and come back up, make this kind of move here, then we would secure our trades. Alrighty, and what is gold doing? Okay, so we kind of have a alrighty. Well, there's that. Okay, it's coming down. It hit that 61.8 level. It's still selling though, so we can still hold on to this trade. I don't know what happened to my entry, my paper trade there. But remember, we're still waiting for this buy. So we're waiting for, price to come back down to these levels. We have 2 minutes to the New York Open to give us a good entry back into that buy to this level here. Alrighty, what's SPX doing? S&P. Looks like price went about 10 points into profit here, pulling back. Definitely, if you want to see your low to your high here, looks like price may pull back, to this entry point. If it does, if it's going to, make a full retracement. And so that kind of helps us as well to see, okay, should we get out of this trade? If it's just going to come back to our entry point and we're not out already, maybe you hold on to it. So I use that to help me as well. All righty. Okay. Can place. Our entry here, it touched this 786 level. We have 10 seconds, 9 seconds on this candle. Let's see if it's, do I have to put like a buy limit? Jeez. Let's see if I can do it. Let's see if I can do it. Is it just not doing it from what's going on? Anyways, all right, gold. All right, gold is coming near. This is its sell area. This is our S0. So, I'm sorry, this is a buy area. If it breaks, we're seeing that. So I'm going to make it green just because I love visuals. Buy zone. All right. And if price makes a lower low and breaks out of this level, right now we're not anticipating that because it is near our buy area. It is oversold. However, we have to go with price structure. So if price continues, we see we have this low here. We'll do the same exact thing, 15-minute low. Okay, if it breaks that level, we might see a pivotal shift and then, we continue to the next level. You'll use your pivotal levels. You see that? Okay. It's doing exactly. You guys see how price came over here, touched this 786 area. If we would have been able to be in our paper trade, we would have got in around this for this buy here. We're seeing that our RSI is oversold. It's pushing up. We're near this R8, but of course we are on the 1 minute time frame. I would definitely bring it up to the 5 minute. And let's see what gold is telling us on the 5-minute. We got that shift. We'll see. Okay. So we're going to see here if price wants to use this as support and then bounce back up here to our next pivotal zone here. You do the same thing in gold as you do the others. Take the 15-minute time frame. We see US 30 pushing straight to our TP area here, shot out of that zone. We were able to get a nice pullback. We put our pivot, what was that called? Our fib zones there, pulled right back to the area just as it did here in ES. Both of these trades are in profit. We are, of course, on the 1-minute time frame. So you're going to see, we're reaching this R7, this R8 area. Price has done what? It's made a new higher high. So now we can adjust. And this is why I say we just focus on one pair, because it goes crazy like this when we're learning. I mean, I could just say, oh, I'm looking at this, I'm looking at that, I'm getting in here, I'm getting out there. But does that benefit you? No. All right, so this was our previous high. So what happened? Price made a new higher high. So we'll trace it down to see where the latest lower low is. It looks like, around this area here. Some might argue that this is the lower low. But we're on the 1-minute time frame. So we're taking the lows from the 15-minute. So, I'll take these candlesticks here and adjust like that. Alrighty, so price is pushing into our area here. We see gold spying up. We see Dow is reaching our R8 here. Okay, so let us go into Renko charts really quickly here. I'm going to just have up 2 charts. E-mini futures on this end, and let's see, Renko. Let's go down here. See if we can pull up a Renko chart. All righty, so I'm going to go ahead and pull up a Renko chart. You guys let me know when you have your Renko charts pulled up. I'm not keeping you guys too much longer. It's only going to take a couple minutes. We have that news coming out, but it's going to be, I want you guys to practice this week so that we can talk about it next Wednesday. All righty, so Renko charts, they help us to stay in the market here. I'm going to take off this. They help us to stay in the market by letting us know when we see, for instance, these green blocks here, that tells us that the market is still buying. We have a heavy buy here. And top step, we don't really see these wicks, but these wicks kind of show us if the market pulled back. But this just helps us to identify, okay, sorry, let me go to the 3-minute time frame. Market movement. Even if there's a pullback, should we still be looking for buys? So for instance, look at this trade. Look at this market movement. If we have a vertical, let me just put a vertical line here on Tuesday at 10:30. Alrighty. Tuesday at 10:30, when we finally got this green printed candle here, and the market has just steadily been going up. So this would have been this candle looking at, let me mimic it and make sure we are still on the 3-minute here. So our 3-minute time frame, we saw that, we had this huge engulfing candle here. We had this gap area, price pulled back here, but then finally so this was this huge red movement. But then finally, right around this candle, we got a nice green candle printed. And as you can see, it just continued to be green, telling us, look at how, let me move it back. Sorry. Look at all this movement here. Candles up, candles down, moving sideways. But what did our Renko charts tell us? Gave us that green printed block. Gave us another green printed block. That's just it helps us to stay in on the side of the trend. Now, when we see kind of this kind of movement, this sideways movement, remember New York open, news coming in, but typically we see some nice, good trends here and just help us to stay on the right side of the market. Look at this example. We got this green printed candle here on Tuesday at 342. We could have been in the market Tuesday at 342. And if we would have held our trade, or, if you would have just known to keep looking for buys. There's still, even though we have these selling candles, we're having, this different momentum. So this really helps those of us, especially in this type of market, to help us identify the overall trend of the market. If you don't like to get caught up, let's just say like in that pullback that we just did with US 30, and you just want to wait, okay, let me continue to take buys. It's still in this buy momentum. Of course, once you see, you use this in conjunction with your candlestick formations and your candlestick patterns and your pivotal levels. They help to tell you too when there may be a little pullback here. And if you want to get out of your trade and wait till the next green candle is printed to get back on the right, so that it helps you to stay on the right side of the market, especially when we have all of this noise. Very, very simple. What was that? ES crossing 5470. Ooh. Okay, so you guys see how here on the Renko charts, we have this little pullback, but it's been steadily green, steadily green, steadily green. So, again, we were looking at, oh my gosh, do you think it's going to go to our TP2 area? This was our original R7, and then our box was all the way up to the R8. So, and identifying if your trade is going to continue to buy or continue to sell, we have to wait we have to wait until that candlestick is printed. Just it moving like that and just kind of giving us just that red volume. It has to be printed, so we have to wait until that candlestick is printed to give us an idea of our next move. Now, as we can see here, because we have that news coming out, we can see maybe a little pullback, but it did exactly what it was supposed to do. It went up to our ultimate level. We were looking for resistance to be at that level to look for sells. It's pulling back a little bit now, but our overall candle is still green. Does everyone see? Oh, Maureen, how you get your Renko charts is when you come over here to the top of your taskbar, and up here where you can have your line chart, your Heikin-Ashi candles, right down here, you have Renko charts. And so as you can see, this huge, red candle here, we have this engulfing thing. Our Renko bar is still green. That's giving us an indication that the market still wants to give us buying power. Still wants to buy. We still have volume on the buy side. Okay. It went really close up here to our next major price level, which was that 55.50. As we can see, we have a new green candle still pushing forward. It hasn't printed. That's why it's a little light there. But you guys, we did amazing. It's just as simple as that. It just helps you to see the volume, what's going on. I don't know because I haven't tested it on NAS or any of those things. I know I saw someone using Muhammad on Top Step. He was using Renko as well, and he trades NAS. And I think he used the 100 tick chart for his trading style. So you guys have to, before you use this, you definitely have to back test, see where you see clear price action. With the trading style that I use, the strategy that I use, the 3 minute. The 3 minute has definitely helped me to stay on the right side of the market overall. So as you can see, 3 minute chart, this one candle, we're not used to ES candles being this, one 3 minute candle used to be like what, 5 points, 3 points. This one 3 minute candle was 55 points. That's insane. If you just had, if you had one contract on, which not an E-mini, just a regular contract there with a micro, that's $50 per point. That would have been insane. But still, with if you just had one mini, that's still $5 per point. That's still a decent move. That's still $275. That's your day if you were in a combine. That's your day if you were in your live. How many of us, I know after they took out taxes sometimes, barely made that. Those taxes were killing and, a day's worth of work. So we want to be grateful. We want to take what the market's giving us, not being greedy. We have our trade setups here today. Awesome. Does anyone have any questions before I let you guys go to explore the world? Okay, well, you guys, it was a pleasure sitting here with you guys for this hour and 43 minutes. We went over Renko charts. We kind of looked at how to get in it. We did our top-down analysis for ES. We went over our charting steps. We set up a trade, how we entered, got back into that trade. This trade right here. Our ES trade popped off for 24 points. Our Dow trade gave us 23 points there. Our gold trade looks like it was selling, came back down to this bar. We are to this point here. Now we have a nice green candle. So again, you see if it's going to break that level, continue to shift lower if you have any pivot shifts. But you guys, just marking up your charts, definitely placing your highs and your lows so that you can anticipate when you're going to start getting that reversal before, our indicators pick up on that. So you have a clue into the market. You can preempt your trades there. We have our Renko charts to assist us in staying on the right side of, that market volume, just making sure that it basically tells us where majority of those orders are, buys or sells, All right. Oh, thank you so much. Ty says this was a great way to return from vacation. You're always on vacation. You never take me. That's why you're going to teach the class next week so I can go on vacation. You guys have a great trading day. Much success in the markets. And I will see you guys again, same time, same place next week, Wednesday. I will be on Top Step again this week. I'll tell you guys the time. I would love if you guys showed up again for me, like you guys did last week. I felt all loved and everything. So, all righty, you guys. Any questions? Go in the Telegram chat. Post your charts. If you need help with your positions, wanting to know where is the next take profit or an additional take profit area, we can talk about all that. It's not a signals group. I'm not just going to be dropping things all day and telling you in and out. We tried to do that last year, but not, with trade ideas, but because of the brokers and all the changes and things like that. So I'll try to drop when I see something in the charts, you guys, just so that we can all be looking at the same thing. I never want to be in a trade. I'm not that type of person like, oh, just made 1,000. No, I'm going to let you guys know, oh my gosh, look at this trade. So, and you guys do the same for, we work together here. All right, you guys have a great day. Happy trading. Make that money for me.